Stay bullish. That's the message. And in this update, I'm going to share where and how I will stay on the long side of indices, bonds, and a whole lot more. This is exactly what I've been doing. If you are watching these free videos, if you are watching Charts and Coffee, and if you are catching my sessions, of course, in the Simpler Central Room, as well as the Sector Secrets Mastery, let's get to it. S&P is on the chart. If we take a look at what we're dealing with, and I don't mean for the last month, I mean, let's go back to the last quarter. Let's go back to October. This is an environment that has largely been dominated by green candles. This is a bullish environment that has mostly been in an uptrend or neutral. Very little time in the S&P has been spent in a downtrend. That is the lower probability side of expectation. Buy the dip. Don't let anyone convince you that buying the dip is just some sort of meme or funny little Instagram post. The fact of the matter is, if we can locate where support is, whether that be the wave, whether that be the support of the daily price movement range, that is going to be probability. It's not about certainty, gang. It's not about, oh, the win rate's 100%. Nobody wins all the time. But if you want to increase the probability that you're on the side of the market that has follow through in an environment like this, wait for pullbacks. It's the gift that keeps giving. It's the sale that we want to buy into. And that's what gets us up towards 5,000. Right? And of course, we're going to hear all sorts of cries about it's overbought, it's extended, this is the top. I don't know about you all. I've never once seen the future, right? I don't have a crystal ball, and there are far too many traders running around talking and acting like they do. Let's not be one of them. It's not about being right in a YouTube video. It's about making sure that we can manage risk and get some follow through, right? I know, crazy unpopular take, right? No, we can predict the market. Alrighty, moving on to the NASDAQ. Same thing, gang. Now, NASDAQ, of course, this week has been a very interesting week. And more so than my breaking down the NASDAQ, let's talk about the stocks that, well, frankly, everyone's talking about. Meta, Amazon, Apple, Google, Microsoft, and NVIDIA. Now, if we're taking a look at these, and I hopefully I kind of took my time just for a moment, you glanced at it. If you've been following these videos, if you've been following me in Charts and Coffee, Monday through Friday, every morning we do not live analysis before the bell. You have a symbol you want me to show you the setting set up for, or levels that are setting up, let me know. Every morning we go through them. Look, NVIDIA's been in an uptrend since the 11th of January. Buy the dip. Every candle you see that touched the gray support zone, that is a buy setup. So let's take that then to something like Meta. All right, there's nothing to do with Meta way up here. Everything has to catch up to this. This is what happens when Zucks pays a 50-cent dividend. How long has Meta been in an uptrend? Again, since the 11th, since the 12th, right? There's no short here, right? The idea is not to short. The idea is, frankly, let the launch happen. I'm not interested in making a guess on earnings. Let the launch happen. If you're already long based on being above the 200, based on the uptrend that we've got, great, right? But now we're just going to wait for another setup. Now, case in point, Google. All right. Google was in an uptrend too. Yes, but what we're not doing, okay, listen up. This is really important. There's a big difference between buying in levels like this, right? Like this, off a Darvis level. There's a big difference to that, focusing on the overall uptrend, and buying right in front of earnings there. Big difference. One is buying into support. The other is buying through resistance. It's the latter that I do not do. Okay. We also know earnings are not a surprise. We know when they're coming out. And just because Meta had one of these moves, look, there can be the Googles and the Intels of the world too. Let's be real. So let that happen. Now the question I'm getting a lot of is, okay, Rog, can we buy Google? And I think it's absolutely, based on what I see, I hate to say I think, and there I let one slip. All right, take a look. What we want to remember is we trade what we see, price action in the daily price movement range, overall uptrend. That's the kind of setup I'm interested in. Now, there's a lot of reason to wait until Monday because Meta just had earnings yesterday. That affects this candle here. Meta and Google are part of the same sector. That's XLC. And that move higher in Meta should drive XLC higher, should help Google get some support. This is really about an individual boat, albeit a big one, and the overall tide. NASDAQ's pulling up to higher highs. Meta's at highs. XLC is supported. It's Google's turn. It should play catch up. On Monday, we can take a look at daily price movement ranges. Amazon's another one that I'm just going to sit on the sidelines until we get to the support level again. How long has Amazon been in an uptrend? It had a much better December than it's had January. But once we're above the 200 and once we're printing mostly green grab candles, well, you're going to see once again, pause it if you'd like. Pause the video and ask yourself this year, how many times, with green grab candles really dominating, have prices hit the gray of the daily price movement range and continued higher? Go ahead and pause the video and take a look. In fact, any of these charts that I'm showing you, pause the video, take a look at the daily price movement range. I'm bullish, so that means we're focusing on the gray zone. How many times did price move into that zone and then follow through to the upside? That's the focus, gang. That's what we want to do. Let's do this with Russell. Is Russell in an uptrend? It is not. Is it above the 200? It absolutely is. Daily price movement ranges are great in uptrends. They're perfectly fine in sideways trends. This is the sector that I'm least bullish in, unlike NASDAQ and S&P, that I'm very bullish in. Financials are strong. Tech is strong. Even healthcare is strong. That disproportionately benefits the S&P, which is punching up to a higher high. That does benefit the NASDAQ. It actually benefits the Dow too. We'll get to that one in a moment. But take a look at KRE. This is heading lower. This is going to drag on the Russell. Take a look at the Dow, punching up to a higher high. Why is that? XLK, XLF, XLV are all heading higher. When that's the case, the Dow has to move higher. Those are three of the most important cylinders in this motor called the Dow: financials, healthcare, tech. To no one's surprise, when you see those particular cylinders firing, here we are at 38.8, knocking on the door, 38.9, right? This is what it means to stick with the bullish side when we have the evidence that we can be bullish. And the last bit of it here, let's take a look at bonds, and I'm going to show you how bonds and the macro of the Fed fund futures, meaning our target rate probabilities, are setting up. Bonds are tricky. They had to respond to non-farm today. They had to respond to FOMC this week. We're above the 200. We want to focus on the long side because yields are going to come down. Why am I so confident about that? Well, I follow the data, right? So let's take a look here. This will be the last thing we look at before we wrap up. Target rate probabilities for March. Yes, it is largely going to be a month that holds. Just because we're going to get a delay in ultimately that dovish pivot, the actual action, the words are here, the expectations are here, and 60% expectation that we will cut, and a 13% expectation that March will cut already and we'll be down at a second cutting opportunity. Far, far less, right? What does this 475 to 500 column represent? It represents that March saw a cut, and then there's a 13% chance that May sees one, right? This column here at 500 to 525 says that there's more chance that March was not a cut and that May is a 60% likelihood. What about this column here? This column says March is not a cut and there's a 26, almost 27% expectation that May won't be either. But you can see who's leading. All right, June, we can do that same kind of analysis. Every time we have data around inflation or jobs, we're going to have an opportunity to see these shift. The Fed's going to cut, gang. It's just getting pushed out a little bit further. That's where we sit. And by the way, equities are at new highs. They believe it too, right? Let's not trade what we think. Let's trade what we see. Let's stick with the long side. Stay bullish, my friends. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.